shouldn't know. I got secrets.
Hi there, Stephanie Cameraman, the Stock Whisperer, here with this week's Dark Pool Insights for January 20th, 2020. I am back from my vacation. New Zealand, Australia, those are like the most beautiful countries. You guys have got to go. Definitely get there at some point in your life. But wait until the fires are over. Yeah, they're pretty bad over there. We had a couple days that was a little bit smoky in Sydney, but we had so many days that wasn't. It was breathtaking. People are great. I hope you guys enjoyed learning about Japanese candlesticks and volume spread analysis. It's amazing stuff, but keep in mind the dark pool prints always come first. This week, I'm going to get back into giving you some really great swing setups as well as showing you how to make 450% ROI on jackpot lottery ticket option trades. But before I do, we definitely need to go over some of the past trade recommendations from December. We're going to see how they did, and I'm going to also give you all new fresh trade setups to trade off of them right now. So we're going to start with Uber. Yeah, how many of you traded Uber? Absolutely one of our best winners in the Java pit. If you recall, we were bullish above the 30 level. Yeah, we were bullish above 30. I'm going to go ahead and show you that chart from December 2nd's Dark Pool Insights. If you recall, I showed you some of the great trades we had. In this last slide, I showed you the next trade setup was bullish above 30. If you want, go ahead, go back to that December 2nd's Insights. It's there for you. And go ahead and take a listen. But as you can see, Uber has certainly cranked it up above this 30 level. In fact, it went to 35. The $5 increments are one of the strongest levels that computers buy and sell off. In fact, I use it a lot for my swing trades, as you've noticed. So it's not surprising that it stopped at 35. Let me show you a longer term chart so we can find the T-spot, otherwise known as the trend change, for another swing setup, just in case you missed these two. But before we do that, I need to show you the recent dark pool prints that have come in. We have a really big one. That's why it really moved once it went past 30, 2.6 million. And then we have these guys, these 500,000 share prints on January 6th to January 9th. From $31.49 up to $33.40. So we always want to be bullish above these prints and bearish below. So let's go back to the chart and we'll draw some trend lines. Two simple trend lines. X marks the T-spot. So we are going to be bullish above 36.25. Here are my trade setups. Yeah, we really need to break above that for this to be a real trend change. It definitely popped all the way up there to that resistance point, but that is really key. Earnings are February 6th. So be careful if you're going to trade options. Don't pick that expiration date. All right, let's move to another trade recommendation I had. Freeport McMoran, FCX. In December 16th, Insights, I showed you the trade setup on FCX. We were bullish above 13.25 and we were bearish below 12.75 for FCX. You know, we did hit two upside targets, 13.37 and 13.50. However, this has been a tough trade. It was whiplash. If you're trading it, you know what I'm talking about. And this happens when they're not done entering. In fact, we got more massive prints. Actually, this is like the most prints I've ever seen in such a short period of time for FCX. I do expect a very big move into earnings, and that's why I put a strangle on, and I'm going to show you that in just a moment. But let me just show you the recent prints that we got. We got this really big 1.4 million at 13.10. And we got this 975,000 at 12.90. So we're still in that area. It just has not moved. Let's check out the options because normally I will never trade into earnings. The implied volatility, the Vega, is really high. They're expecting a big move and they're padding those options. But when I see really heavy dark pool activity coming in before earnings and they're not expecting a big move, that's when I like to put on a strangle. And you've seen me do that many times in the past. And here's an opportunity. They're expecting a 57-cent move. The earnings are Thursday, January 23rd. And you can see the next week after that, they're expecting 74 cents right here. I'll just circle that. All right, so not that much because these prints mean a much bigger move. I'd say like a $2 move could possibly happen, but then again, it is a gamble. Anytime you take any trade into earnings, you are gambling. You are, it's speculation. I don't know what the earnings are. I don't know how the stock is going to react. But if we can put on a low risk, high reward trade, I'm going to absolutely do that. And that's exactly what I did. However, you got to be careful with your expiration date. So the earnings are January 23rd. Now you have the week of the 24th, but I don't ever want to do that. There's just not enough time for momentum. A lot of times they might gap, but you really want to catch a much bigger move. If they gap and then drop, these options that are expiring on the 24th, okay, they're going to decay a lot. And if you just go up a week to the 31st, you're going to find that you're going to have a lot more success when doing those trades. So I did it. I put on this FCX strangle into earnings, a lottery ticket trade. I bought the 14 calls expiring on the 31st. I bought the 12 puts expiring on the 31st. I wrote in my trading room, we've had major prints and no movement. Usually that means somebody knows the earnings. Kahuna followed me in with a little tiny strangle. And so did Nathan, and I know quite a few traders probably did as well. Let me show you that. This is Tasty Trade software. I love it. That little orange ruler, yeah, that indicates the expected price movement. So I usually like to buy just outside of it for an unexpected move. So that's why I picked these 14 calls and these 12 puts. And you can see it's right around 13. So if it moves over $1, these are going to really explode. So let's check out the chart. All right, so here's the chart of FCX as we stand. And you can see there's a lot of room above 1375. So that's going to be my upside trade. Yeah, so you don't have to take this into earnings, really, because there is a chance that that trade won't work out. I'm not risking a lot. I'm really going to capitalize on the movement after earnings. That is always the best. So watch these levels, bullish above 1375, and I'm going to be bearish below 1250 for FCX. Now, let's say they bring it even below that $11, that last target, and that's where the 200 simple moving average is. I just want to get ready for another trade, which is bearish below 1050, going all the way down to 9, because you can see that we've had support a couple times. So if it does get ugly, really ugly, that is where they're going to most likely take it. All right, so let's move on to another setup we had, this time on Pfizer. So Pfizer had a lot of dark pool activity in the December 2nd dark pool insights. This was our next trade setup for it. If you recall, we were bullish above 38.75 and we were bearish below 38. And look what happened. Wow, we went all the way to $40.80. We hit our targets and went beyond. So how do we trade it from here? Well, earnings are coming up January 28th. All right, so we want to be careful on this one. And you can see that the expected movement, the IV is much higher. They're expecting a $1.15 move. So let's check out the recent dark pool prints. And you can see we had a 3 million print at 39.06. Let's go to the chart. And there is the print. So you can see that we are trading above it, right? Yeah, we closed right just shy of 41. So in the bigger picture, you know, after earnings, sometimes we might get a move pre-earnings so we can trade this week's up to the 24th expiration. Maybe we'll, you know, you can buy the 41.50s or the 42 calls. But I'm really looking for the bigger trade. So that would be above 42. That's the T spot. The trend change would change if we can break above 42. This is my swing setup for that. And I'm going to be bearish below 39. I want to be prepared on both sides. If we go below that 3 million print, that's when I turn bearish, especially after earnings. If it closes below that, yep, that's when it gets ugly. All right, so let's move on to another one we had. You guys, a really big trade that happened. Can you guys take a guess which one I'm talking about? I'll give you a hint. It's something that you can eat. Apple. That's right. I know you guys guessed Apple. Do you remember? First of all, I have been whispering about Apple since November 21st. Here, let me show you. This is my Twitter account. Go ahead. You can go back to November 21st. I wrote holy moly in my tweet. Whenever you see me write holy moly, pay attention. It means something really big is going to happen. And then, of course, I put it in my whispers pretty much every single day. Then there were some more prints, November 27th, some more prints, December 2nd, and that's when I put it into the insights. If you recall, I put the prints ranging from 260.39 to 266.45, and we were bullish above 268 for Apple, and we were bearish below 260. Here were our trade setups, and as you know, we hit all of our targets and more so. I mean, Apple just going up to the moon almost at 320. So let me show you some recent prints we just had. Recent print, and this just happened. Actually, two of them on January 16th. We had two prints for 400,000 shares at 314.08 and one at 314.48. Now keep in mind, earnings are Tuesday, January 28th. And this is going to be our trade setup. Look, if we go above 320, I'm going to be bullish. If we go below 314, I'm going to turn bearish. And it most likely will happen earnings. Unless there's a whisper out, somebody knows something that might happen pre, but those are always going to be the key levels. Okay, so I know many of you have been watching gold. In fact, I have been watching it and trading it. Even while I was away, I got to tell you, I was telling everybody on the cruise ship to buy gold when it went above 1,500. That was a really key level. Gold was a beast. You guys remember the bull flag I showed you on December 16th whisper? I do hope that some of you caught this. Yep, I showed you this bull flag. We measured the pole, we measured the distance, and bam, gold went up. But we did have a downside trade just in case we were to come down below 1460. We went all the way to 1600, actually a little bit above it. But look at that long-legged doji right here. Yep. Yeah, that was crazy. Yeah, but we closed just underneath this trend line. Yeah, that's a really big trend line that goes back to 2016, believe it or not. Yeah, it's powerful, really powerful. Love my trend lines. So moving forward, We are going to be bullish above 1560, and those are our targets if we do go above that. And we're going to be bearish below 1540 for a retracement down to 1500. It's a possibility. However, let's check out, I know because many of you don't trade gold futures, let's check out GLD and GDX. GDX, all right, GDX, these are the recent prints, by the way, that we've had on it. We had a really big one at 29.63. See this one, 1 million. Yep, that was definitely some selling as we hit this top trend line. Yeah, and then we came back down to 28, and you can see we had buyers come in at 28.11, a little guy at 28.13, and a guy at 28.16. All right, so sellers, buyers, are they going to take it to the top again? What's our trade setup? Well, we're going to be bullish above 29.75. I want to break above that 29.63 level. Yep, that's going to be really bullish. And we're going to be bearish below 27.50. Excuse me. Now, I have to share with you gold. I'd rather be bullish on GLD. It's definitely been stronger than the miners. So if you have one to pick, I would go with GLD. We had a big print at 146.20 on January 16th. And then on Friday, the 17th, we had two big prints. 146.69, I'll just circle that. And we had this one, 146.81. These are fresh prints. So how are we going to trade this? Yeah, we're going to be bullish above 147.50. And we're going to be bearish below 145. I do know a big move in gold is going to happen because we had big prints on IAU. Here's the weekly chart. You guys know this is the dark pool favorite. It trades slow as molasses, so don't trade it, but definitely watch these levels. Okay, we're going to be bullish above 15, and we're going to be bearish below 14.60. So those are key levels for gold. All right, let's move on to some video games. Activision. So if you recall, I called out this quadruple threat bull trade on Activision. We had prints, we had bullish seasonality, we had this cup and handle, which goes to 70, by the way, and we're not there yet. And the fake out trade we had. And we just started to move higher. Yeah, on Friday. Look what happened. You know what I love about this? I love we closed strong. I put on a lottery ticket trade in the Java pit, but I love, look at the volume increase. Yep, I absolutely love this. So I'm bullish above 60. My first target 62.50, 65, 67.50, and 70. That was my original trade setup with the cup and handle, but we just did an accumulation period here, and now we are moving up. Just be careful. Earnings are February 6th. Okay, so in December 16th, I shared another great trade setup with you guys that also had prints and seasonality. Do you remember this one? H&R Block. That's right, it's time to pay some taxes soon. So this guy just got a big lift. This is why the seasonality is so great this time of year. If you recall, this was our trade setup, December 16th. Yep, going up to about that 26 level. And guess what happened? We came pretty close, just up to 25. Yeah, it was awesome move up. And I don't feel like this is done yet, you guys. No, we pulled back the gap fake out. Now we're going to wait for the gap fill trade. That is the key, the gap fill trade. So we're going to be bullish above 25. If H&R Block can pull up, it might come down a little bit more, then start to pull up. But if it can break above 25, that second test, I absolutely love it. All right, so just be careful. You know, earnings are not until March 5th though, so we're pretty good on this one. So the big question I have is, did you catch this trade this week on Home Depot? I was tweeting like a maniac. First, January 13th, I spotted the unusual prints on Home Depot. Now, I don't always put unusual prints, but when I do, it means an unusual move is going to happen. Pay attention. These are my favorite trades. Okay, 1 million on a $223 stock is a lot. Okay, and then we had another 400,000 share print. Let me just show you. So here I have going all the way back to April 2019. And you can see there's hardly any big prints that are greater than 250,000 shares. This is what makes this so amazing, you guys. This was huge. But you know, a lot of times when we get these prints, we get a splash, right? How to trade the splash. This is the most sought after strategy that everybody wants to learn, and I'm going to teach it to you right now. So this is what happens. First comes the print, which came on January 13th. Then what happens is the splash. It usually splashes in the opposite direction of the true intended move. So if they're buying, they'll splash it down. If they're selling, they'll splash it up. It's not 100%, but it's really high, you guys, that this happens. So this is why I tell my traders to wait a couple of days, let it marinate, let it splash, and then if it comes up and breaks through the prints, that's when you want to get in, and that is exactly what happened on January 15th. You see how it moved up? And that's when you want to go long above the dark pool. Now, I'm going to teach you that persistence pays off. In fact, there is a fabulous woman in my trading room called Donda. And Donda is definitely one of my most persistent traders, and I love her for that. You know, look, there's a lot of stuff going on. I mean, how many stocks can you watch at one time? So I depend on my traders to call out when stocks are breaking above prints, going above my levels, going below my levels, and check out Donda's call outs on January 15th. First, she called out, okay, that Home Depot was testing the print right at the bell. Okay, in fact, I'm going to draw a line right there. Yeah, 6:34 a.m., that's in Pacific time. So 9:34, 4 minutes after the bell, she was all over it, okay? Then she called out Home Depot WW. That means worth watching. It means it's moving over the print. You want to watch this. Then she called out it's above the print, and it moved above the 4 and the 8 exponential moving average on the daily today. Then she called out it's still moving at 11 o'clock. Then she called out once again at the end of the day. She called out Home Depot moved above the 4 and the 8 and the 50 simple moving today. Seems odd to see all three averages close together, closing above the print. Volume is only 40% of the daily right now. Yeah, so volume wasn't that high, but the big guys were already in. The next time we're going to see those big prints is when they're selling, right? So what did I do? Yep. I bought Home Depot. Now, I like to wait to the end of the day for a swing trade. I wanted to make sure it stayed above the prints, and it did. At the end of the day, I looked it up, and I said, oh, it's above the prints. Let me buy it. I just didn't want to pay a lot of money for them because this is expensive, you guys. It's $224. So I like to buy out of the money, as you know, but I had to go pretty far out of the money to buy an option that I didn't mind risking overnight. And these were 14 cents, $14 a contract. I bought the 230-250 calls expiring January 24th, lottos above prints. I always give a reason why I am buying. And I wrote to Donda, we had highly unusual prints. It's worth risking 14 cents. If it moves, I'll add and roll. It really was a textbook long setup because it closed above the prints. It closed strong. There's no big wick at the top. I love this. So a lot of my traders followed me in here, some of their posts. Nathan following Steph into the HD Lotto calls. Mary Beth jumped in. Louise, Miss Sniper jumped in. Yeah, and I said it looks like we're going to shop at Home Depot this weekend. If you had to trade the stock, I used to be a stock trader, by the way. I only started doing options about 4 years ago, and it's life-changing, totally life-changing. Because years ago, I would have bought 1,000 shares of Home Depot, $234 a share. And you know what that would cost? $234,000. I don't know about you, but I don't really have $250,000 that I just want to put into Home Depot overnight. What if there's news that comes out, right? What if it was selling? And that can always happen. We can't always control that, but we can control how much we risk on a trade. And that's what keeps you in the game. Now we have two choices as an options trader. We can buy in the money. We can buy out of the money. You never want to buy at the money though. That is like the worst. It's not good. Just don't do it. You're either going to buy in the money or out of the money. Now in the money, you're going to be more expensive. Therefore, your risk is going to increase if there's a reversal. When you hold a stock overnight or an option overnight, directional, okay, directional trade overnight, your risk is high. What if it reverses? Okay, so that's why I like to risk as small as possible. So if we would have went in the money, 225 calls, okay, or close to the money, just a little bit outside, are $2.30. That's how much they were on January 15th. So 10 contracts, which is equivalent to 1,000 shares, would cost us $2,300. Now, I don't want to risk $2,300 because what if these slightly out of the money go enormously out of the money? Like what if Home Depot gapped down to 220, 218? These would crumble, okay? We could lose $2,000 easily, okay? But what if we bought these 232.50 calls for 14 cents? That's 10 contracts, $140. That's it. If Home Depot gapped down the next day, my risk, total risk, would be $140 to own 10 contracts. That's a pretty good deal, right? And it's not so far-fetched. Home Depot could move $4 in one day. And we have like 10 days. Well, not 10 trading days, but we have 6. 6 actual trading days. Now, just because we buy the 232.50 calls doesn't mean we need it to go to 232.50. It can go to 228. It can go to 230, and we will make a lot of money, okay? So we're using it as a vehicle, although those are pretty good targets. So a lot of my traders took this overnight, but the next morning we were above the prints still, and I felt the need to post it out on social media. I wanted people to really know about this trade and get in it. It really did not move much yet. There was still time. So I called out at 4:20 a.m., yeah, that is early in the morning, that Home Depot was above the prints and that I was bullish on this trade. All right, so I hope that you guys got into this. If you weren't in my trading room, I wanted you to know that I really, really love this trade. And my traders started to take profit because you can see that the stock really went up. You can see it popped up to about 228. And so Jeff got out of half. I teach my traders to scale because we don't know where the top is. We don't want to have exititis. Donda called out it was riding the 4 EMM, the 4 EMA. That is the pink line on my daily chart. And Paul got out of half of his at 232.50 calls, 38 cents. Yeah, we like to take profits when we have 100% ROI. And so Miss Sniper took profits. Nathan got out of half. Yeah, it started to accelerate and 200%. These guys were up 200%. So I had to take some profit. I got out of half. Yeah, over 200%. Yeah, these guys went up to 50 cents. And John thanked me for the Home Depot trade. Paul got out of another quarter. Let's see, Dr. P did really, really well as well. Let me show you the chart on Home Depot. Yeah, so this is a 15-minute chart of the actual option. The 232.50 of 15-minute chart. So you can see that we did. Look at the jump. I love this. As soon as the stock jumped, the options went from literally almost like 10 cents, okay, to over 80, you guys. Is that amazing? You don't ever want to just do this, though, without having unusual dark pool activity and having a great setup. Timing is everything, and this is what I teach in the Java Pit, how to know exactly when to enter and exit. And you can see my traders did really, really well. Frank got out of his 220 calls, $2. Kara sold half. Oh my gosh, explosive, $1.12. Wow, Kara. Paul got out of his last quarter, 52 cents. Let's see, Jeff got out of Home Depot. He made 35 cents. Miss Sniper, she got into the 232.50 calls, so she was letting me know next week, 37 cents. Jeff rolled his trade. Lorraine, $1.28. Dan B bought the 235 calls. Yeah, we were rolling, buying, selling, getting out. I got out of another quarter, 62 cents. That's 342% ROI. And I didn't want to, you guys. I did want to hold my last quarter. I decided to buy the 242.50 calls. Okay, I went further out of the money and I went further out in expiration. I went to the next week, January 31st. I didn't want to pay a lot, and these cost 19 cents. Yep, I was just rolling them. I said I still have the last quarter, but you know what? After analyzing the fact that they were up 483%, my inner voice came to me and said, hey, Steph, well, what would happen if we pull back tomorrow? Are you going to let a 480% ROI just slip off the table? And I already had rolled into those 242s. So I don't like to be greedy. And so I did take profit on these calls. As you can see, I called it out right here. Mary Beth bought some more Home Depots. But what I want to show you is crazy. They went to 87 cents. Okay. The in the money versus the out of the money is insane. The ROI was so much higher on these out of the money, these 232.50 calls versus the almost slightly out, the 225s. Such a big difference. See these guys, here's the chain. You can see that these 222.50s, all right, they went as high as about 638. So they went up about 250% ROI, maybe slightly higher. Not as much as 480% ROI. Yeah, that's why I love going out of the money. My risk was much smaller. My reward was much bigger, right? And as traders, like that's what we want to do. We want to keep our risk low. We want to keep our reward high. So I wrote that my trading room was killing Home Depot. As you can see, they killed it. And thanks to Donda who called out that we were above the dark pool prints yesterday. She is definitely Trader of the Week, and she rocked it as well. We've given her a little new nickname. We call her Gigi. So thank you so much, Donda. You are amazing, and your call outs, yeah, your persistent call outs help us make money, and you just keep it up. Okay, so wait, we're not done. Home Depot kept going up, by the way. Yep. It kept going up on January 17th. On Friday, we had another up day, and we started to take profits. Paul took more profits on his roll. Otis took profits, Miss Sniper, Lionel. Otis took profits, Kara took profits. If you recall, I jumped into these 242 50s. And look at this. They went up quite a bit. I paid 19 cents and they went up to 43 cents. I sold half. And then I sold another quarter. It started to move down a little bit. Otis made 155%. Mary Beth, yeah, it was awesome. Awesome job by everybody. Now, for you guys that watched my candle presentation a couple weeks ago, you know about the 3 white soldiers on Home Depot. See them? This is a rare reversal pattern, actually. Yep. It suggests a strong price reversal from a bear market to a bull market. Yeah, it's kind of like a staircase. Each should open above the previous day's open, ideally in the middle price range of the previous day. Each candlestick should also close progressively upward to establish a new near-term high. Yeah, this is a bullish pattern. And of course, we have prints. So we'll see. I have my last quarter. I will roll if we continue to move onward. And so you can see Paul did really well on his last, and then he rolled to 242 50s, and Otis sold his last. So let's look up the chart and see how much higher we can go, because I don't believe this trade is over yet. I see more potential going all the way up to 240, but just keep in mind earnings are February 25th. All right, we have time. Oh wait, we have a whole month. So this could be amazing. All right, I got another one for you guys, another new trade. Bank of America. We had a very big print. A 5 million print came in at 34.81, and it really hasn't moved yet. So I'm excited. We also had a lot of prints on the financial ETF, XLF, which one of the top holdings is Bank of America. We had a 2 million print, a 2.7, 1.6, all in the range of 30.78 to 30.96. Now, seasonality shows it's usually bearish this time of year, but you know what? Prints trump everything. Okay, so if we do go up, I'm going to be bullish, but if we go down, we'll have prints and seasonality, and that is usually the best trade we can take, as you know, STD, seasonality, trend, and dark pool. So let's map out some trades to take on BAC. We are going to be bullish above 36. Yep, that's when I put my uber bull hat on. However, I will be bearish below 34, and those are my targets going down. Okay, I got one more really good one for you guys. Bonds. Yeah, TLT. It's my favorite way to trade bonds, by the way. They have the best options and the best prints. 6.6 million printed this week. Yep, on the 14th, Tuesday. 138.82, and we've been kind of splashing around. I have a strangle on it. You can see we're in a wedge. Wedges are really hard to trade until we break out. So we know we have this big, fat, juicy print right here, okay? But we haven't quite moved a lot yet. So my trade setup for TLT is we're bullish above 140. And those are my targets. and bearish below 136. Yeah, that's if we break down below the wedge. Now, if we go below 137 area, yep, I'm going to be bearish, but really that 136 level is so key because that is the bottom of the wedge. And this is the end of my dark pool insights for January 20th. Until next time, happy trading, everybody.
No thinking, that's my secret. Gonna keep it my secret. My secret.